Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the recent low of 21,750 points towards the recent peak of around the 25,000 psychological level. Since then, we are seeing just a mild consolidation on the Dow Jones as its pullback just towards the 24,250 points before hovering on a sideways manner over the past 2 to 3 weeks trading period. For now, let's monitor for these two bands, the 24,250 points towards the 24,900 until we can see a breakout above that. Either way, then we can confirm for the next direction on the Dow Jones. Should there be a breakout above the 24,900 points and a closing above that, then only we can confirm for further recovery back towards the 26,000. But if the 24,250 points level fails to hold, then we might see further retracement towards the 24,000 psychological level. So on the Dow Jones right now, we did see a gain of about 0.2% on overnight. And moving forward, investors will continue to monitor for the trade developments between US and China, the US Federal Reserve monetary policy meeting over the next 2 trading days, and also the Euro Brexit situation in the Eurozone. So these are the three main factors that can move the market either up or downwards. Should there be a trade deal breakthrough between the US and also China, then we might see the US stock markets likely to likely to cheer on the news to above the 25,000, heading towards the 26,000. Similarly, on the broader market, we did see the S&P 500 has again recovered from the 2350 towards the 2680 level. Since then, we are seeing just a mild consolidation just towards near the 26,000 psychological level as the S&P 500 hovers on a sideways manner over the past couple of days. Unlike the Dow Jones Index, we did see the S&P 500 however continues to trend slightly weaker. The Dow has closed on a positive tone on overnight, but the S&P 500 has fallen about 0.2%. The weakness on the S&P 500 was mainly dragged down by the sell-off in technology sector. So on the S&P 500 right now, we need to monitor for the breakout above the 2680 until we can see a breakout above the 2680. Then only we can confirm for the S&P 500 to see another wave of recovery towards the 2800. But if the 2600 level fails to hold, then we might see further pullback on the S&P 500 towards its next support, located towards the 2500 psychological level. On the crude prices wise, we are seeing the crude prices has again recovered from the recent low of 42.50 level towards the recent peak of around the 54. Since then, after rejecting the EMA 60 level, we are seeing a sideways movement on the crude prices as well as it hovers between the 50 towards the 54. On the crude prices wise, let's monitor for the breakout above the 54. This could be considered as a healthy consolidation after a very strong wave of a rally around $11. We are seeing as just a sideways movement over the past 3 to 4 weeks trading period. So this could be the healthy consolidation that we're expecting the crude prices to see another wave of a recovery towards this next resistance located towards the 57.50 or even towards the 60 US dollars per mark. In the meantime, the 50 will serve as the immediate support level for now. The recovery on the crude prices, whereby it gained about 2.5%, was driven by the US move to sanction Venezuela's state oil company PDVSA. So this could potentially cause the global crude oil supply declining by about 600,000 barrels per day. Okay, on our local front, the FMKLCI has again recovered from the 1630 towards the 1700 level. Since then, we are seeing some of the breakthrough on the above the 1700 on several occasions, but there's no follow through buying interest beyond the 1700 as the FMKLCI has once again pulled back below the 1700, and recently as well we are seeing the FMKLCI has breached above the 1700 psychological level on 25th of January, but the next day we are seeing the bearish engulfing candle, and on yesterday we did see the confirmation of the selling pressure on the on the FMKLCI. So on the FMKLCI right now, we will continue to monitor for the breakout above the 1700 until we can see a follow through by interest above the 1700. Then only we can confirm for further recovery towards the 1740 level. But if the FMKLCI continues to reject the 1700, then we might just see a sideways movement between the 1665 towards the 1700 psychological level over the longer term period. Tracking the gains in the Wall Street on the slight gains on the Dow Jones and also the higher crude oil prices, we might be seeing some of the mild bargain hunting activities from the previous 2 days pullback. We might be seeing just some mild bargain hunting activities with gains likely to be capped towards the 1700 psychological level on the FMKLCI. The lower liners wise is traded in a similar manner after the strong recovery from these 10,900 points level. We are seeing the FM small cap index has been rejecting above along these 12,300 points level or the EMA 60 level over the past couple of days, with some of the bearish candles being formed. With the overbought position right now, over the past 2 to 3 weeks trading period, any pullback for now will be a healthy pullback for the lower liners to digest their recent gains, which is about 11 to 12% gain from the previous low. Any pullback for now will be a healthy pullback before the next recovery to resume on the low liners back towards the 12,800 points level. On the stocks wise, some of the stocks that we can watch out for firstly will be YOCB. While CB is still in a pullback phase, so any recovery from now will be just taken as a technical rebound play. Price has earlier hit from the hammer candle above the 95 cents level. Since then, we are seeing a good recovery pattern on the YOCB as price rose and also maintained its position above the EMA 20 level over the past couple of days. On yesterday, we are seeing a good gap up formation on the YOCB accompanied by some of the higher than average volumes. For YOCB right now, let's monitor for the breakout above the 1.05 cents level. Should price breach above the 1.05 cents, we could expect price to trend towards the 1.10 cents or even towards the 1.14. Stop loss below the 99 cents level on YOCB. Things appears to be slightly positive on YOCB right now. As you can see that the MACD indicator has been forming the higher low and also higher high formation over the short term. The RSI has been maintaining its position above the 50 level since the start of the year. On an MNRB, price has learned from the bullish divergence signal as learned price from the lower low formation, but the MACD indicator has been turning higher throughout this period of time. After hitting the recent low of around the 984.5 cents level, we are seeing a good recovery trend on our MNRB as price has done from the breakout above the 96 cents level. It formed the breakout just towards the EMA 120, it staged a healthy pullback over the next 2 to 3 day stream period before the continuation pattern was re-established again, and as MNRB staged the breakout above the 1.08 cents or 1.09 cents level, accompanied by some of the improvement in volumes being traded, with the short-term breakout pullback and continuation pattern being formed above the EMA 20 level and also the breakout above the 1.09 cents. We could expect a further recovery on MNRB towards the 115. That will be the immediate target price for now, followed by the 1 ringgit and 21 cents level. Stop loss on MNRB will be located towards the recent low, which is currently located at the 1 ringgit psychological level on MNRB. On AWC wise, price has hit the recent peak of around the 89 cents level. Since then, price has staged a sharp pullback towards the 62 cents. With the After hitting the 62 cents with some of the climatic volumes or some of the higher volumes being traded, we did not see further through selling pressure, and instead AWC has recovered and maintained its position above the EMA 20 level over the past 4 trading days. On AWC right now, let's monitor for the breakout above the 69.5 cents level. Price attempts to breach above the 69.5 cents, but it did not close above that on the past couple of weeks. Yesterday as well, we did see a price attempts to breach and also close above the 69.5 cents, but price did not close above that. So for now, let's monitor for the breakout above the 69.5 cents. Should price breach above the 69.5 cents, we could expect price to recover towards the 74 or even towards the 78 cents level. Stop loss below the 66.5 cents level on AWC. Last two company for the day, firstly will be Magnum. Magnum has earlier recovered from the recent low of around the 178 cents level. Since then, after the first wave of recovery, we are seeing a sideways pattern being formed before price continues to creep higher. And throughout this period of time, we are already seeing the uptrend interpretation being formed as the EMA 9 is above the 20, 60, and 120 has been in line. And on yesterday, we are seeing a good bullish candle was being formed on Magnum, accompanied by some of the rising volumes being traded. For Magnum right now, we need to monitor for the breakout above the 2 ringgit and 4 cents. Should price breach above the 2 ringgit and 4 cents, we could expect price to head towards the 2.17 or even towards the 2.25. Stop loss below the 1 ringgit and 97 cents or 96 cents level on Magnum. Last company for today will be TMT Life. TMC Life has been on a pullback phase towards the recent low of 69.5 cents a level. Price subsequently staged a recovery, but the recovery was short-lived towards the 82.5 cents a level, with some of the high volumes being traded as price continues to sell off and it erased all its previous sessions again. With that, price has been traded on a sideways manner, but over the past couple of weeks, we are seeing some of the accumulation was taking place on a TMC Life, with some of the improvement in volumes being traded. On TMC Live right now, let's monitor for this short-term breakout above the 74 cents. Early on, price attempts to breach at above the at 74 cents, but price did not close above that. So for now, let's monitor for the breakout above the 74 cents. Should price breach above the 74 cents, we could expect price to head towards the first target price at 77 or even towards the 79.5 cents. Stop loss below the 72 cents level on TMC Live. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some question here, firstly on Pamaju. Pamaju has earlier rallied after the breakout above the 28 cents level. Price have been rallying towards the intraday high of 45 cents before staging a sideways manner. For Pamaju right now, it has been traded on a sideways manner between the 33.5 cents and also the 37 cents level. Let's monitor for the breakout above the 37 cents. Should price breach and also close above the 37 cents, then we could expect price to recover to see another wave of recovery towards the 40 or even back towards the previous peak of the 45 cents. But if price were to reverse its position below the 33.5 cents, then you have to cut loss or take profit immediately on Pamaju. Things appears to be still slightly positive right now, as we are still seeing the high low formation being formed. So let's monitor for the breakout above the 37 cents level over the near term period. Radiant Global Tech Berhad has earlier recovered towards the recent peak of 21.5 cents level, with some of the high volumes being traded. Similarly, price has pulled back with some of the similar volumes being coming out from Argitech as price pulled back just towards the EMA 120, which is around the 16 cents level. With price finding some support along the 16 cents, We are seeing price has staged breakout above the 17.5 cents level recently, as price continues to maintain its stance above the EMA 9 level over the past couple of days. The uptrend down orientation formation was also recently re-established. EMA 9, 2016 and 120 has been in line. On RG tab right now, we could expect price to continues to creep higher towards the 21.5 cents. That will be the immediate target price for now. Once the 21.5 cents level breach, further upside will be seen towards the 25 cents. Stop loss below the 17.5 cents level on a RG tag. You can either use the daily EMA 9 if you don't use the 17.5 cents. If you think that the 17.5 cents is still a very high risk, the EMA 9, which is currently located at the 19 cents, will be taken as the immediate stop loss point if price were to fall or were to trip below that. All in all, I suppose that price could likely to just trade on a sideways manner, at least for the next 1 to 2 trading days. Then we could be expecting something like a flag formation or breakout or T+4 formation breakout. This could be the T-day price pullback or trade on a sideways manner over the next 3 to 4 trading days before another strong bullish candle being formed with some of the high volumes. So this could be the short-term breakout pullback and the continuation being formed on GTAC. On Astro, price is on a strong recovery trend after hitting the recent low of 1.05 cents. We are seeing price continues to trend higher, forming the higher high and also the higher low formation throughout this period of time, as price recently breached above the 1.38 cents. Since then, price continues to creep higher. On Astro right now, you can use the daily EMA 20, which is currently located at the 1.50 cents level as your trading stop loss point, as it recently has been hovering or being supported along the EMA 20 level throughout this period of time. So the daily EMA 20, which is currently located at the 1.50 cents, will serve as your trading stop loss, while the price will likely to continue to trend higher. Firstly, towards the 175 or even towards the 1.90 cents level on Astro. So let's say if price were to reverse from this point onwards, then you can use the daily EMA 20 as your trading stop loss on Astro. On Charimin, price continues to rally sharply higher after the recent previous breakout above the 32 cents level. Price has formed the breakout, the pullback just towards the EMA 20 and the continuation pattern being formed again. Once again, it formed a healthy pullback just towards the EMA 20 and the continuation pattern was being formed on Charimin. So for Charimin right now, price would likely to continue to see further upside right now. Firstly, towards the 74.5 cents, that will be the immediate target price for now, followed by the 81.5 cents level, while your stop loss point can be trailed towards the daily EMA 20, which is currently located at the 57.5 cents level. For Charimin right now, the momentum is still very strong right now. There's no bearish divergence or signal as the MACD indicator continues to point for a higher high and also the higher low formation. So price is likely to continue to trend higher towards the 74.5 cents or even towards the 81.5 cents level. While the any pullback for now, with some of the very strong candle being formed on yesterday, we might see another gap up formation at least for today as price continues to trend higher. But over the next coming days, we might be seeing some of the mild pullback before the next recovery to resume. If there's no further question, then we'll end the morning briefing for today. Thank you.